What's up, everybody? Welcome aboard. This is Trading with Bubba. It is Tuesday, December 26th, and hope you had a great holiday, a great Christmas if you celebrate. And markets have not changed much, and nor did we expect that to be the case. We are still in the skeleton cruise. We are still in the lack of overall activity. We are still in the lack of participation. And you want to, if you're not sure what I'm talking about, take a look at the volume. Okay, the volume on the Russell is barely registering. The volume on the spiders is barely registering. The volume on the Q is barely registering. So here we are in a market that's been now open for 90 minutes today, and there is virtually no action, with one exception. They continue to go higher. Look, we're not going to tell the markets they can't go higher. All we have to do, we've got a number of choices in the market today. Okay, we can either choose to sit it out and observe. We can look for trades to make. But the last trade that you want to make is to decide that you're the person who is going to pick the top of the market, or in some cases the bottom, but certainly the top. It is the hardest thing to do. Recognizing when this is going to stop is much easily done by waiting for the chart to tell you that it has reached a pinnacle. Now, certainly we can see that we are extremely overbought, but extremely overbought is a relative term as to when is that overbought going to resolve itself. I stand by what we've said in the past, and that is looking for some credit or some premium to sell. Well, if you want to. Now, again, if you don't want to play, you don't have to play. There is no reason. But if we go through and look at the overall market, you can see that every single stock has virtually zero volume. Now we're looking at the Apple, for example. Apple right here is in the middle of nowhere. There really is not a trade to make unless you are someone who does iron condors, and I am not recommending those. I personally more like to sell call spreads at resistance, put spreads at support, and deal from there. So here, Apple, we're dead in the middle, but we're still on an uptrend. We reach resistance. We're getting a little bit of a pullback. We're relieving some of that overbought condition, but still need to retrace back to the mean. Okay, Amazon, is still overbought and still getting more overbought. So again, if I were going to trade Amazon, which I am not, I would be looking to sell call spreads in Amazon as we sit here. Now, again, the things that I'm going to use for my personal premium selling will be the spiders and the Qs, because I want to take advantage of the zero DTEs. That's what I look to do. But again, I do show you and share you all the charts because I do carry positions through our portfolio models and all these stocks that I show you on a daily basis. And right now we have been long Amazon, we have been long Apple, and of course coin, we are still long as well. But again, coin has reached a level of extremely overbought. And again, it doesn't, there is not a time limit to how long something can be overbought. There is a chart that will tell you when that is coming. And here you can certainly see that we are dramatically overbought still. Okay, again, if you're going to trade here, the only good trade to make is to sell call spreads. And again, you're going to hear that. And that's not because we are bearish or negative the market. We are playing the pattern of the market. The pattern is overbought, high probability of a retracement to the mean. It's that simple. Okay, highly overbought, high probability retracement to the mean. Okay, now again, the mean will rise, so it doesn't mean that it's going to come all the way back. For example, coin down to, or Meta back down to 336. That happens to be where the mean's sitting right now. But again, remember, when you're selling premium, as long as it's not going against you, you're still collecting. Okay, Google, same thing. Okay, Google. Hold on one second for me. Okay, Google again overbought. Okay, it went from oversold to overbought as it crossed over the mean. But had you have been playing the methods that we're talking about right now, and again, we use these methods all the time, but we use them exclusively in the market conditions we have right now. Okay. Again, we use these methods in combination with other types of trades when the markets are active, but when the markets are doing what they're doing now, we use them exclusively. So here you had you been selling put spreads when it was oversold, well, guess what? They had cashed in, and now you'd be looking to sell call spreads. Okay. And of course, again, this is the purpose of reading and understanding the chart itself. Okay, as you look at IWM. Okay, where are we? Well, we're at very overbought. So now here's where you get a little bonus in IWM today and tomorrow, if you choose. And again, I am not encouraging you to do anything, but if you choose to do so, you can sell call spreads today, like a 0 DTE in IWM, and tomorrow, because today is an expiration, which is usually on Monday, but because of the holiday, it's Tuesday. And of course, you've got tomorrow. So you can certainly look at that if you choose to. Microsoft, again, here are we. So Microsoft, it has come off from being oversold back to right to the mean. Again, we expect mean retracement. And if you understand, and I'm showing you here the Bollinger Bands, if you understand them, they are a mathematical indicator that widens and narrows based on volatility. But the standard deviations, okay, up and down, you've got a 2 standard deviation move up and down. And right now, a 2 standard deviation move is from 373 to 366. So it's $7 approximately, or $3.50 for each standard deviation. We expect a pullback. Now, right now, we're dead at the mean. So we have no trade to make here. We have no reason, because whichever side we pick, we're trying to guess from here. Now, certainly, I would say the bias in Microsoft would be higher. I mean, we are along it, so it is certainly higher. NVIDIA, again, is a little bit to the overbought side, would be looking. But again, now as you start to break these down, and you look for, I mean, you're not going to trade each and every one of them. You're not going to trade 1,000 of them. Okay, you're going to look for the ones that you think are the best. Well, here in NVIDIA, for example, we are not dramatically overbought right now. We were overbought. We came off and did retrace to the mean, and now we're just churning. So NVIDIA would be one that probably would wait, versus the Qs, which are still dramatically overbought. Okay, and of course, the benefit of the Qs gives us the 0 DTEs, then so it gives me a chance to trade every single day, whatever it's going to be. And remember that when it comes to premium and options, the sum total of the daily is always going to be greater than the sum total of the weekly. The sum total of the weekly is always going to be greater than the sum total of the monthly, and the sum total of the monthly is always going to be greater than the sum total of the quarterly. So if you did the math by yourself, okay, and I said, okay, I'm going to sell a credit spread in the Qs, and let's say I want to sell I did sell. So I sold the 410, 411 call spread this morning, okay, for 40 cents, okay. Well, again, the 410, 411 for 6 months from now is going to be not much more than 40 or 50 cents. So I can sell that 26 times. I can sell it 180 times for the same 30 to 40 cents versus selling it one time for 50 cents. So which is a better way to do it? And that's kind of what you want to think about, is how do you put yourself in the best position on a consistent basis, okay, to watch yourself. And of course, as we look at the square is certainly overbought. Here we go, spiders. Again, overbought, look to sell spreads. And again, we do this whether they be overbought, oversold. We don't have an overall opinion on where the market's going to go from here, although I have an opinion that I do think the markets are going to go lower from here at some point, but not right now. And certainly I am not going to position myself other than based on what the chart itself tells me to do, because there's no reason for me to be overly aggressive and try to outguess or outsmart the market, especially when we're dealing in the conditions we are, which is there's nothing going on. Tesla overbought. But what do you notice about Tesla is that the moves themselves are getting narrower. The standard deviations are getting narrower. The bands are getting narrower, which indicates there's probably a much bigger move coming, direction to be determined. Okay. But again, if you're just looking at it straight rote, here I'd be looking to sell call spreads. Okay. When is up against towards up, I'd be looking to sell call spreads. XBI, be looking to sell call spreads. Okay. And again, like I said, we don't care. Zoom, I have no trade. And you have to be honest enough with yourself to identify that there's no trade. Okay. You have to be honest enough with yourself to say, this is what I'm trying to accomplish. This is what I'm going to get. And this is the position I'm going to put myself in. Because anything you do other than that, you're just taking unnecessary risk. And I think too many of us take unnecessary risk in the trading world that we don't have to take. Okay. Look, there's enough risk. We get enough risk every single day. Okay. Let's not kid each other. We're not stealing here. Okay. What we're trying to do is give ourselves the highest probability of success and put ourselves in by far the overall best position to be successful. Because again, we're playing a probability model, which is no different than if you're a game player, poker, gin, bridge, or backgammon. Those are mathematical games. Okay. That the better player will win over time. You're not going to win every time. But again, if you're collecting, let's say on a credit spread, 30 or 40 cents, okay, and you hit that trade 7 out of 10 times, you're gonna hit pretty well. So I think it's something that you have to continue to work with and watch over. Okay, to put yourself in the best position over time. It is not a question of again, trying to be the smartest. All it is a question of looking at a chart, reading the chart, and making your overall decision based on what you're reading, not based on the news that you heard, not based on anything but what you are seeing right in front of you. And I think too many of us have a tendency, okay, to want to put things in play that really don't exist. And I think that creates a bigger problem for many, because we hear the news, we listen to news, instead of just saying, okay, here's my spiders. Okay, very simple. They're overbought. Doesn't matter what my opinion is. I mean, personally, I believe the markets still have room to go to the upside. Okay, now I'm pretty bearish overall, but right now, again, I base this on the time of the year. I base this on what is going on. So in my eyes, the market has an outstanding chance to continue to work its way higher. Okay. Because again, we're at the time of the year. It's been pretty bullish. Okay. Whether you like it or not, the markets have been pretty bullish. So why should I fight this? Why should I decide, okay, today is the top? Okay. That is something that's a fool's game. Okay. Trying to tell the market what it's going to do, the market's going to do what it's going to do. And if you continue to put yourself in trouble trying to argue the point of what the market's going to do, then basically you're just screwing yourself. Okay. So you have to use the charts, whatever they happen to be. And again, also whatever time frame you're using. I mean, I'll trade, as you know, many of you have seen before, that I'll trade these short-term charts on day trading. Now they're different. Now I'm not really all that adept on day trading when I can see that the volumes are 10 to 12% of what they should be normally. So why would I want to be involved and be too active in here when the overall market itself is not to my advantage? Remember, we are trying to put the market to our advantage. Okay, we are trying to set ourselves up to put ourselves in a position of strength. By fighting into these markets and trying to tell the markets what to do, we are not really dealing with strength. We are dealing from weakness, and we are dealing from hope rather than fact. And the bottom line is the fact of the markets is they're going to do what they're going to do. We have to be prepared for that fact if they're going to do what they're going to do, and not try to outsmart them and try to say, well, I heard this news on XYZ news station that was bearish. Well, it doesn't really matter, okay, because the price action will always dictate what you're looking for. The price action that's right in these charts, no matter what time frame you're looking, okay, will always dictate. And certainly if we were busy, I might be looking, I mean, this would be, if it was busy, but again, look at the numbers. Normally we're trading this at about 5,000 contracts. There's less than 1,000, okay, per every 4 minutes. So do I really want to get involved in this market right now when I can see that the volume is 20% of normal? Does that make sense? Is that something you want to do? So again, I urge you to learn to be more patient. I urge you to learn to sit back and not try to be overly active in these markets. You know, if you're blowing your brains out trying to be too active in markets that don't want you to be active, and you're blowing your brains out making bad trades and that are causing you distress, is that the right way to trade? Is that not making a mistake? Is that not putting yourself in a position of failure versus putting yourself in a position of strength? So if you sit back and you wait, so why would I want to take a lot of risk now? So if I sell a 10 lot of a call spread at 40 cents and I got 60 cents risk, okay, I can live with the $600 risk, okay? Versus some days I might live with $6,000 risk. But today, I'm just trying to grind out some crumbs, okay, just to pay my bills, basically. You know, again, just to have some, as they say, some pocket money, okay. All I'm trying to do now is if I'm gonna be here, is to put myself in a position to take a little bit of money out of the market, okay. And if it were up to me, I would tell everybody that this is probably not the ideal time to be trading, anyways, because you are not at a significant advantage, no matter what you think. Because you can never outsize this market. You can only get yourself in trouble as the things that can happen, because the markets themselves can do a lot of wild things. So I know we're a couple of minutes short, but we're going to cut it short because I mean, how many times can I repeat over and over the same crap that is what it is? Because that's the conditions right now are crap. So either you sell premium or you set it up. Those are your two choices today. Have a great day, everybody. We'll see you back here on Thursday.